We are here on this amazing day. Okay everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay guys, we are marking up EUR CAD. Let's head over to where price began and let's take a look at what's going on. Okay, so let's grab our red marker. Let's take a look at the market to see what's going on. Okay, market started off with a doji back in 1993, and from there we went to a push down. Okay, the market pushed down to an area of support. So where the doji started off at, doji standing for indecisive candle, as in the market don't know what it's going to do. Go up, sideways, consolidate, or go down. So sideways is consolidation, by the way. So as we start off with the doji up top, here we go at area of resistance. In this area right here, there's a pattern that pushed the market up. I'm going to explain what I see. So what happened was the market did a formation of a pattern. This is the first leg of the pattern. This is the second leg of the pattern. This is the third leg of the pattern. And here goes the fourth leg. So after the fourth leg of the pattern got created, we had to wait for the market to break the resistance, which it did. The market broke, came back to retest the resistance, and then from there the market was out of here. So this will be the first push. We got a second push, and we got a third push. From there, the market went into new areas of higher highs. There's a pattern up there, so I'm going to demonstrate what I see. So this is the pattern right here. I'm going to circle it. So this pattern right here is very important. So this pattern is not very important. I should not say that. So what's important about this area, because I just almost missed it. So what's important about this area is this wick. Once we start seeing this wick push up, this wick shows that the market pushed up from 3 pushes from the bottom of lower lows. It pushed up this high, and then the market wasn't able to hold. The green candle closed out there, so that showed us that the market may be losing momentum. The next candle formed. So once the next candle formed, it tried to close below the green. It didn't happen. The next candle closed out as in a doji, showing that the market is indecisive. So the market didn't know it was going to go up or down. After the doji like it became some type of retest here, and then the market tried to break out again. It didn't happen, and so the market dropped. So there's also another pattern here. So I'm going to demonstrate what I see besides what I just said. So there's a few things that's important about this area. These wicks. So this wick here showed that the market may lose momentum, which it did. This wick right here, which is long doji wick, showed that the market may consolidate, which it did in this area here. So when the market did come up to higher highs, I'm going to demonstrate what I see. So this will be an area of resistance. Market came up to areas of higher highs. There's another pattern here. Here it goes. So this is the first leg. This is the second leg. Came down at the doji, which created support for the push up for the third leg. So the market wasn't able to break the resistance, so the market dropped. So that formed the double top. So once we see the double top, we have an idea the market may drop after the retest. Here goes the retest here. It tried to reach back up to the previous areas of higher highs. Didn't happen, so the market dropped. So from there, it's going to keep on breaking areas of support. It retested to try to come back to return, trying it again, and it just dropped again. So what this is, it's just the same pattern that we just seen. So I see 2 in 1 shot. So I'm going to explain what I see. I'm going to erase it again. I want to make sure you guys see what I'm saying. So as this when this market pushed up, when we had this area of resistance, there's another area of resistance here. So basically the market did the same thing twice. Came up, did the double top, 1, 2, 3, 4, retest, the market dropped down. Okay, so we peeped at the first time. The second time it happened again. Market came back up into this area of resistance. 1, 2, 3, 4. That's the double top. It tried to break twice, wasn't able to drop. The retest happened here, and the market just dropped further and returned back to previous area of lower lows. Exactly near previous areas of lower lows. Once the market hit areas of lower lows, another pattern formed. We caught the double bottom. Here we go. First leg, second leg, third leg. Around this doji's the retest, so the market pushed up, came back down with that green one to push back up. Okay, double bottom, push up after the retest. The market went back into areas of higher highs. I see something here. I'm going to demonstrate what I see. So what happened in this space is this. So there's a few things that caught my attention. The first that caught my attention is this wick. So once I started seeing these long wicks right here, they started showing me, okay, the market may lose momentum because the market actually pushed all the way up just like it did previously over here. The green candle formed. Actually, the green candle was all the way up here at one point. It wasn't able to hold to close out. If it did close out here, let's say this green line, this green body of this candle, if it closed out right here, that means it would have closed out here. So if the market closed out of this body here, then that means the market probably went up to create new areas of higher highs. But it didn't happen. The market lost momentum, so we caught that drop. So that's one part of it to show that the drop is going to happen. Also, what I would have been alerted by was, so basically what I'm doing, I'm reading the candles individually. So we got the long wick that showed the market lost momentum. Two, this is a pattern. It's a engulfing pattern. The red candle engulfed the green one. So when we see that, the market may drop. Okay, and it did. The market came up to areas of higher highs, which was resistance. We got that one top there that we didn't break, and then the market tried again with these wicks, maybe like twice or three times, because you see the wicks shooting up, and the market wasn't able to break it, so it dropped again. So it almost did it tried to do a double top because the other pattern was wicks. I just call it a single top. It just did that. It came right back down. Okay, double top, single top, triple tops, quadruple tops. After the retest, they're all going to do the same thing. The market is either going to go up or it's going to go down. If it don't go up or down, the other option is the market is going to consolidate. Okay, so after the market lost momentum, we got a full drop to the bottom. 1, 2, 3 pushes to the bottom. Okay, so let's check out what we see here. So there's a pattern here. I'm going to demonstrate what I see. So once the market came to areas of lower lows, it created a pattern. Here we go. 1, 2, 3, 4. That is the double bottom. Okay, once we had the double bottom, we know most of the time after the double bottom a retest is going to happen. The retest happened here. Okay, it just retested previous areas in here. Okay, it became a support. The market created enough momentum to go up, and all this retest is the market is trying to return back to areas of lower lows. But it didn't happen. The market lost momentum and it went up. Okay, so that's what happens at the double bottoms. Most of the time. Sometimes it doesn't. Sometimes it does the opposite. But as long as you wait at the as long as you read the candles and just be patient, you'll see the move. Okay, so from there the market tried to return back to areas of resistance up here, but it didn't happen. We had about 1, 2, 3, 4 touches. We had 4 touches up here. In this time frame, if we went on to a lower time frame, we probably would have seen more touches. So basically the market broke the resistance, came back down to retest the resistance to reach up to previous areas higher highs. It wasn't able to break the first time, it came back down. It tried the second time, wasn't a break, came back down. Tried a third time, wasn't able to break, came back down. And it tried a fourth time and a fifth time with these 2 wicks, which it wasn't strong enough, because if it was a body that was going up there of the candles, it would have showed that the market was kind of, trying to at least leveling off. But because we had wicks that kind of leveled off with the areas of higher highs here, basically what this area showed me that the area is losing momentum. So what this is just a retest. Okay, it's just this is a retest area of, it tried to retest previous areas of higher highs. It didn't happen, so the market dropped. So once the market dropped, it went back into lower lows again, into the areas of lower lows, because if you look to the left, it matches up with this side, not to a T, but it's the same concept. If you think about this being the first level at the bottom here, okay, the next level will be a second level, so 1 level up. So it's still lower lows, is at the bottom. Okay, if it breaks down lower, it'd be new lower lows. Okay, so let's take a look at the pattern I see. So this pattern is a double bottom. So we would have took this trade for the sell, and once we took that trade for the sell, we hit our support. We were seeing that this green pattern, this green candle, would have engulfed the red one, would show some type of entry. We could have took entry there, and then after that, the market would have consolidated sideways. It would have broke out to come back to retest previous areas of support, and the market would have shot up. Okay, back, try to reach areas of high highs, shorten itself. Something went on here. Let's take a look. Okay, so once the market did this push, one green, so we had a green push, a green candle push, green candle push, green candle push. Then we got this red doji, indecisive. So the market saying it don't know if it's going to go up or down. So we have to wait till the next candle to form, and it's in the area. It just consolidated sideways. So once it consolidated sideways, we would just wait it, unless you want to trade in the zone, because this would have been like a zone area. It would have been like a little box, and all you would have been doing is buying and sell, buy, sell, buy, sell, until the market broke out, and we caught that sell all the way down to the bottom, back to previous areas of support. The market would have charged itself back up down here. We see that the wicks is dropping right in this area. When we see these wicks dropping, the market is losing momentum. So that means the market may turn around. Exactly what it did. So we got a double. This is the third leg. The fourth leg came up, it had to retest, and the market's out of here. Went to new areas of high highs. Oh, excuse me. The market went to previous area high highs. Here we go. From there, the market came up, touched our resistance once, twice, dropped back down, came and touched it a third time, but it shortened itself, so it shows that the market losing momentum, because we starting to see that downtrend right here. Okay, so once we would have seen that the market is not able to break the first time, then it'll try it again the second time, and it's shortened itself, and the third time it's trying again, it's shortened itself lower than that. That's all that's showing, as the market is making new areas of lower lows. This is a downtrend. The market is going down, and that's exactly what it did. The market went down. So once the market went down, it went back into an area of lower lows again. So now, once we get back at that bottom, Forex 101. Once we at the bottom, we gotta get to the top. Once we at the top, we go back to the bottom. I see a pattern here. This thing did a double bottom, but it was a lot of consolidation in here. So I'm gonna explain what the market did. Though this will be the first leg of the double bottom. Here go the second leg. Hold on. Third, fourth. Retest. Alright, so that's not exactly what I seen the first time. I thought I seen something else the second time around. But what I see here is the market did the, okay, this would be the first leg, this would be the second leg. The market came back down for that third leg, and here go the fourth leg, and then the market consolidated sideways. Instead of it consolidated slash retest, because it is bounced up and down. The market could retest something that is supposed to have been out of here after the support, but it didn't happen. The market just lost the momentum, and then it went into new areas of lower lows right here. So once the market went back into a new area of lower lows, we have to wait till the market to come back out of here to reach higher highs, and exactly what the market is doing. It's just coming out of that higher highs. I'll draw it out for you guys. So if we had an imaginary trend line, we would be able to see that the market is in it. Okay, my screen's not marking up. So we can see that the market is in an uptrend. Let's try this again. Okay, bingo. So now we can see that the market is in the uptrend. The market is respecting our uptrend as well, our trend line. Okay, and also in the trend line too is very important too. I see a lot of double bottoms. When we start seeing double bottoms, you start seeing these wicks. This area starts showing that the market may consolidate itself just a bit. Besides just the consolidation, is also an uptrend. So it's like a slight up consolidation, but more up. But the most important thing in these, what I see, is that these look like a lot of double bottoms. So I'm explaining what I see. Over here, it looked like a double bottom. So it looked like it was something trying to go on here. But it did more like a single bottom here. Then it bounced back out. Just like a double bottom. First leg, second leg, third leg, fourth leg. Retest happened here. Let me try to draw it out again. So first leg, second leg, third leg, fourth leg, retest, and after the retest, the market does what? Shoot up. Exactly what it did. And from there, if the market can break new areas of higher highs, it goes up, but it didn't. The market lost momentum, so it went down. So market price was trying to return back to previous areas of lower lows right here, but it didn't. So the market created enough momentum to build back up to go up. And there's another pattern here, which is the double bottom. It's real tight in here, so you may not be able to catch that if you unexperienced. But there's a double bottom right here. So the market just basically did this, bounced up, came down, bounced up. So that's the double bottom. We wait for the retest. After the retest, the market shoot up to new areas of higher highs or previous areas of higher highs, because we are down the time frame. Look, and then not the time frame. We are near the price action. And then from there, the market retesting, and then came down because it wasn't able to break previous areas of higher highs. So now we got to figure out what's the market doing. So we did see that the market was in an uptrend, and the uptrend turned into a downtrend because it wasn't able to break the resistance of the highest high mark. So we're going to play our markers, red markers, and we're going to head over to price action to see what's going on. Okay, so the last time we checked, we did see that we was in the uptrend. The market did drop, so we got it. So we probably not in an uptrend, and we may be in an uptrend. But for right now, it's still like an uptrend. Let's draw an uptrend line. But now, if it changes, then we'll switch it up. We're gonna grab the bottom of this doji. We're gonna slide this all the way up, slice this through, grab that. We think market's gonna reach higher highs. We can slice it through our price action. Okay, and it's touching plane. Okay, so this area is definitely touching. So our trend line is being respected. So we had a touch here. We have a touch here. This area wasn't touching, but we had an idea that market was trying to come down to come back up, and the market came down here again to come back up. And this is actually a double bottom. 1, 2, 3, 4. Push out, retest. Try to break twice. Try to break 3 times. Market drop. So from there, we are in an uptrend. So let's erase out my little red lines again, so we can head back to price action to figure out what's going on. So let's look for SR lines. The way we're going to do that, we go to price action, which is the last active candle. This active candle is red. If we look to the left, we're looking for price to break an area. So it's trying to break this area here. Okay, so we're going to grab that inverted peak. From there, we're going to go back to price. So if the market was going to go up from our SR line, how far would it go up? I'll possibly grab this area of this peak. So this is the peak, the bottom of that first line with the inverted peak. If we would head back to price action, and let's say we go to one level down, how far would it go? It's possible it'll stop right here. Okay, so we grab this peak right here, this peak right here. Okay, so if my lines aren't good enough on here, then we'll figure it out, as in I may have to add more, look like. But let's pop down the weekly time frame to see if we're good. Okay, cool. So cool, that's not good enough. So let's go back, because the market did drop. So what we're gonna do is, let's erase that bottom line. Let's go back to price action. If price breaks this blue line, what's the next level up? It's possible price try to return back to this area here. So price is trying to return back to this area here. Let's go down the time frame and see if anything changes. Does it look better? That looks much better. Okay, so we have more room to play around with. We see that price broke through 1, 2 areas of support, caught our trend line, and it may be riding up. And if we read the candles individually, we can see that the market is losing momentum, because it may be a turnaround, as in the market's at, so we already know once the market is high at highs, the market may come down, and once it come back down to lower lows or close to lower lows, the market is going to come back up. And we can see that the market is going to come back up besides previous besides the earlier time frame, because if we look in here, we read the candles individually. So let's go back to price action candle. So that's a doji, long red candle. So let's go with the 1, 2, 3, 4, 5, the last 5 candles. So first off, the market basically consolidated here. It consolidated in this area. Okay. Once the market came back for the second time to higher highs, the market lost momentum, came down to retest previous areas. So once the retest came, we see that the retest didn't reach areas of higher highs. It shortened itself. The market dropped again. Like it retested again up there, and then the market did a full drop. By the time we got to the fourth candle was long, so it definitely showed that the market is going to be is going down, and it definitely cleared the other side over here. So this red, the bottom of this red candle closing out definitely cleared all this, so that shows that the market is going to drop down to the next level, which is down here. But it can respect our SR line. And I mean, if it respects our SR line, it's going to respect something in this area here. This is why we place the SR lines, because price may not return back to areas lower lows right away. It may or may not. But as long as we go down a time frame, as long as we look at the markups, as long as we be patient, we'll figure out what's going to go in the market. So let me go back to what I was saying. If we go back to the last 3 to 4 candles, we can see that the last 3 to 4 candles losing momentum. Okay, at least definitely the last 3 ones. The last 3 are dojis. So we got a strong candle, let's say 100%. This one became 75%, and it dropped into it instantly to 10%, to another 10%, to 2%. So that shows me that the market is going to go down. Also, if you read the wicks, we can see that we got all these spikes up and spikes down. So this looks like the market is consolidating in this area here. Okay, besides it being dojis, we do know that dojis are indecisive candles, and most of the time when you see dojis come side by side for one another. Sometimes it don't, but most of the time it's always going to look like a consolidation. It's going to look like consolidation when you go down a time frame eventually. If it don't, it don't, but most of the time it do. So I think this is going to look like a drop and a slight consolidation, and we may see a turnaround to go up. It may be a double bottom in here as well, or something forming. Let's take a look. Yep, I was right. Double bottom forming. But before I go to that double bottom, let's go back to the weekly time frame. We're going to add our SR lines in between our blue lines. So this definitely looks clean. Okay, so the way we're going to do this, just grab our SR line, and we're going to grab this peak, this inverted peak here. Okay. We can grab this inverted peak here. I feel like there's something going on in this area here. Let me say, yeah. So there's something here. This one's kind of hidden. Okay. And it's get respected by that doji right there too. So. There's another inverted peak right here. I went too far down. There's another inverted peak right here. There's also another one here. Inverted peak. Okay, there's something going on in this bottom layer. Okay, so this looks like a double line. I'm not 100% sure, but there's something going on right here. The more I mark up, the more I can see. There's a lot going on in here. There's another invert right here. Excuse me. There's another peak right here. Okay, I don't want to go too deep in there because I feel like it's going to be a waste of time. Besides that, I feel like it may be too tight. So it's possible. One more. I'm going to see how it looks. So if I grab this peak right here, this may work. So I see a few of these areas, maybe levels where it'd be hard to break, and the two levels I see will be my last two lines right here. They very close to what together, and these two lines right here seems very close together. So I feel like this lower low area and this midpoint area, the market's going to be may have a little bit of trouble to break, or it's been breaking back and forth, at least with the wicks on the lower time frame. But definitely we just see one breakthrough with the bodies of bearish right here. So if we go down the time frame, before we go down the time frame, let's go back to price action. If we check out price action, okay, we have to figure out what's going on. The way we're going to do that is we're going to grab our rectangle and we're going to place it around, we're going to place it near price action. So we're going to grab the next candle highest high. That's going to be too high. That's not happening. So let's grab the price action lowest wick in the area, which would be right here where my accuracy is, and then we can draw it up probably to about I'm just going to go as far as the price action wick, and if we need to change it up and fix it up, we can. Okay. So also, guys, the pattern we trade is the breakout and retest pattern. I'm going to break that down to you guys. So if price is on the way up on the trend line, if the price is on the way up on the trend line like it is, so we will be looking for price to head to our SR line. Okay, we will not be taking entry. We wait for price to break our SR line. Okay, once price breaks, it will return to our SR line. Once price returns to our SR line, we'll be looking for entry. We'll take entry for the buy, and we'll take it to the next TP. Okay, so we will not be taking entry here. We wait for the market to break out, come back and return, and once it returns, we'll look for entry. We'll take the entry up, and we'll take it to our TP. Okay, for take profit. Okay, so we trade the breakout and retest, breakout, retest, breakout, retest. So whatever it's going to do, whether the market's going to do is going to identify itself here. We see that the market pushed down. The doji came, it may be losing momentum to come up, or it may be losing momentum to go sideways, or it may be just charging itself up for another drop. But as we go down the time frame, hopefully we can see what's going on. And I think we did see the double bottom forming earlier. Okay, so there is a double bottom forming. So right now, this is what I see. The market came down for that first leg of the double bottom, second leg of the double bottom, third leg of the double bottom. We got the doji. So once we start seeing that push down with the bears, with the red candles with the bears, we start seeing that the next candle a doji. So that means the market is losing that momentum. Okay, the doji came, so the market kind of consolidating in this area. So the market don't know if it's going to go up, down, or sideways. We can see that the market may do, we know we're in the uptrend, so the market may do a double bottom. First leg, second leg, third leg, and the fourth leg is going to try to reach it back up to previous higher highs. Okay, and then once it's there, then we got to figure out if the market's going to break up. So what happens after the double bottom is what? The retest first, and then the market may just break up past this area here. And if it breaks past, it's going to head up to new areas or higher highs. So we look like we are in that position of to take entry for the buy soon, but not right now. Right now is a doji. Maybe the next candle that forms out, we can be looking for entry for the trade to take it up. So we got the first leg, we got the second leg, we got the third leg, we got the fourth leg. Retest will happen going out of here. So we just got to wait for the engulfing pattern to happen. If this green candle get pushed up and it closes out above the red one, then there's a chance that it can be entry for us to take the trade, but we have to see the pattern. If we see an engulfing pattern happen, then we can take the trade. So we do see that within our rectangle, I know I need to fix it up on a daily. Within the rectangle, we did find the double bottom. Okay, so we're looking for market to go back up. If it don't respect our trend lines, go down. Let's head down a time frame to see if we can put some numbers on the chart. Okay, so I see a double bottom here. The market retested twice, once, so it consolidated here, about 2 touches to the bottom, and the market pushed up, came back down. Okay, so I'm gonna show you guys what the market is doing. I'm gonna show you exactly what the market's about to do. So the market could be in a slight consolidation with buying and selling on this lower time frame when we was just in. And I'm gonna explain to you guys what I see. And this is very, very, very important. Forex 101. So not all the time, but most of the time, the market is trying to do what it did previously. For example, we seen on the daily time frame the market was trying to do a double bottom. So this is the same area of the daily. So it did the first leg, the second leg, the third leg. Once we get that engulfing pattern after these few dojis, and something closes out above this section, that means the market is going to go up, and it may go up because sometimes it may not. Sometimes it may turn around because of something else may happen, or somebody said something, or some news, or something like that. But if the market pushes back up, then if it breaks through, it could be forming that rest of that double bottom to come back to retest, and then it's going out of here to previous areas of higher highs. So if you look at what I drew here, it looks pretty similar to the other side. Okay, the market is trying to do the same thing over and over. So it's in a consolidation area, which there's a lot of pips in here, so it's not really a consolidation area because there's money in it. But at the end of the day, if you put this in a box, the market, all it's doing is this. So if you caught it here, you take it for the sell, you take it for the buy, you take it for the sell, you take it for the buy, you take it for the sell, take it buy, and so on. So we already know that if it's buying and selling within this consolidation, everything at the lower low is going to look like doubles. They're going to look like double bottoms. So we got a double bottom here with a retest. We may have a double bottom here with a retest because it didn't happen yet. And then another one, if the market doesn't break this area and it comes back down, it may just do another double bottom with the retest, and it's finally going to get out of here. Okay. So to figure out what pattern is going to go in here and what pattern to take entry, you guys would pay attention to this section. So I have to retighten up. We see it on this few time frame. We see it on the 4 hour. We see the same move on the daily, and I think we probably seen it on the weekly, or it's trying to form on the weekly. So each time frame is showing that the market may be going into that uptrend. So I'm going to demonstrate something for you guys. I'm not going to demonstrate. I want to show you something. So the area that we're going to be paying attention to, so on the 4 hours, we have to tighten our rectangle up. So this will be the section of the highest high coming down to that first leg, second leg, third leg, and we're going to squeeze that right here for that fourth leg. If we rate right here, the move is going to identify itself within this section here. So if any green candle close above this section right here, the market may go up. If the market doesn't close and it breaks down, is a chance that it can break down. It could break out it can break out trend line, break out support line, and drop down further. But for right now, we're going to sit here and look like the market is going to repeat itself and do a double bottom for the second time and come up. Okay. So for you guys to figure out what pattern is going to form in here for us to take it for the buy, we are going to go to Google. We'll type in Forex pattern cheat sheets. That's Forex pattern cheat sheets, and we'll go to images, and we will review the images of the patterns. We don't have to remember the names of the pattern because there's a lot of patterns, but we do have to remember what we see. If you're taking a look at the images every single day, before your markups, after your markups, while looking at trading view throughout the day, you can look at it once at 5 p.m. on the daily time frame. We can see the market closes out you can understand the market. If you guys have the busy Forex 101, if you guys have busy schedules, you work 9 to 5s or whatever schedule you have, you can still trade. You just have to get in the market every day at 5 p.m. If you could find time to watch this market at 5 p.m. on a daily time frame and watch the market close out, you can be a trader with a full-time job or whatever schedule you have. You know, everyone can trade. If you have a schedule where you working, you know, all day, you may not be able to get in the market at 5 p.m. That means you switch over to the weekly time frame, and each candle is going to close out every Friday at 5 p.m. Every time a candle closes at 5 p.m., we'll be taking entry on that Sunday morning, Sunday at 5 p.m. and take it all the way up, or take it down, or take it sideways, or what, and see whatever direction it is in. But as long as we wait for the market to close on any of these time frames, you'll be able to trade. Some people trade on the monthly time frames every 30 days, every ending of the 30 days of the month. Some people trade every Friday after the market closes at 5 p.m. They look for entry on Sunday at 5 p.m. Some people look at the market on what day would that be? That would be every day on the daily time frame at 5 p.m. Or you can watch the market every 4 hours throughout the day. So that would be 8 times in 24 hours. So the way it works is you'll get in the market at 5 p.m. 9, 1, 5, 5, 9, 1, 5, 5, 9, 1, 5 around the clock. So you'll be watching every 4 hours. If you want to go down to a 3-hour time frame, 2-hour time frame, 1-hour time frame, each his own. But there's a time frame for everybody. What I'm trying to say, everyone can make money in Forex. Everyone can trade Forex. Everyone can trade stocks, investments, trade. You know, there's room for everybody in the market. Okay, so let's go back to the 4-hour time frame. So if we had to put something on paper for, let's say we seen a pattern happen here, we'll take it to the next area highs. We could grab our long position. Let's say we found entry at this green line after the breakout. The market came breakout retest. So it all depends on how far you want to take it. So once the market breaks this level here, if the market comes out of here, the next level is going to be here. We can take that for 34 pips. Once it comes out of 34 pips, we can look for re-entry to see if it's going to go to the next level. The next level up will be our next SR line area, which will be here for 71 pips. If it breaks that, the next area will be somewhere in this here. You could take it to our next SR line, or you could take it between over in this area of this peak. If not, you can take it to the next SR line. If you want to be bold and you have time and you want to wait and you don't really care and you comfortable with the market and you know what you're doing, you can just take it all the way for the full stretch to the previous areas, highs for 130 pips to the high. And let's say if the market goes to our low, how far would it go back? We'll just pull it back to our previous low of our support line, which would be here. So that would give us, oh, this is an amazing trade. So if we caught this trade and this pattern cleared out, whatever it did, it could be engulfing, it could be any pattern from Google. If we see that trade, that would give us a total of 130 pips up for the high and 23 pips for the low. This is an amazing trade, everyone. Okay, everyone, this is Cam Jones FX Daily Analysis. We have marked up EUR CAD. Thank you for watching and thank you for your attention.